Our guest today is Shana Sissel, founder and president of Banríon Capital Management. Shana, many thanks for joining us. Your first time on the show today. Welcome to Trading at Noon. A little bit more optimism on Wall Street today after the worst week of the year. All eyes on the Fed now. Give us your assessment of what their next move might be.
Well, I think the Fed has been very clear that they are concerned about the inflation numbers remaining pretty hot. We've seen personal income rise, but we've seen personal consumption costs go up even more. So basically, incomes are going up, but the cost of living is going up more than that. So it's not making much of a difference. I think the Fed is really focused on the fact that they need to get inflation back to that 2% number. So I actually am expecting that the next hike will be a 50 basis point hike. And I had actually hoped that they would hike 50 basis points this last time around, but they made their decision before that blockbuster job report. So I think they're going to have to be much more aggressive than many people had thought. And you saw that bond yields really reacted to that towards the end of last week, which I think really is an indicator of the fact that people are starting to really understand that the Fed is going to be aggressive and stay higher for longer.
Let's turn our attention to technology. We've seen mixed results, a little bit of a bounce today. Where can you see value in the tech sector?
So one of my favorite names is NVIDIA. They reported obviously on Friday, and they had some fairly strong results, in the grand scheme of things. Obviously, they saw a substantial reduction in their profit margins versus last year. But overall, I think it's positive. If you think about just generally what some of the legislation is going to be a tailwind to certain areas of the market, the CHIPS Act is really going to benefit semiconductor stocks. So even though they have some struggles, particularly because gaming spending is down, they're losing money on their computer revenue channel. They have a lot of growth opportunity in AI, in their data centers, and things in car production. We've seen demand for cars going up quite a bit. With the tailwind of the CHIPS Act behind them, I think that this is going to be beneficial for some of those semi stocks, and NVIDIA and Marvell are two of my favorites.
Shana, in your notes, you mentioned defensive optimism positioning. Tell us a little bit more about this approach.
So I am known kind of for my focus on using liquid alternative products to help build portfolios. And so when I say defensive optimism, I'm looking at ways that I can use these types of hedged products to position my portfolio for volatility, but also take advantage of what I think is some optimism in the equity markets in the second half of the year. So I'm doing things like using some hedged equity to add beta to portfolios. So one of the ETFs I use to do that is MRSK, which is a risk blueprint, which has done really well when you start to see beta rise across portfolios. So that is one of them. And then I kind of look at these quality names that'll do pretty well regardless of economic conditions. So I've been adding to some of the stocks in like the defense sector. One of my favorite names is a stock called Leidos, which everybody has functioned and used a Leidos product and probably didn't know it when they went through the airport. Very focused on security. As we see geopolitical risk rise, which I would argue we are starting to see, defense stocks tend to outperform the S&P by a substantial margin. So a name like Leidos would really benefit from something like that. But should that risk start to subside at all, they have a rapidly growing healthcare business, which really helps drive potential growth opportunity for the stock as well. So that's kind of a defensive optimism kind of play in the market right now.
Let's turn back to the economy. First, there was talk of a soft landing, now no landing. What's the risk that the Fed pushes the US economy into recession?
I think it's higher now, because I think now it's very clear that inflation has become very sticky and that it is not going to be easily tamed. So they have to be more aggressive. I think they thought towards this end of last year that they could kind of start to dial down tightening. But obviously, with the more recent readings, you're seeing inflation continues to be persistently high. So they have to be more aggressive. And I think, as you pointed out before you brought me on, they're more comfortable overshooting than undershooting. So as a result, I think that that is going to likely push us, as long as they continue to feel like the job market is stable. And remember, employment is a lagging indicator. A lot of the things they're looking at to make their decisions are lagging indicators. And so it is highly likely that they will push, because these lagging indicators will stay stable and not show signs of distress until after we've gone too far, because that's what they look at. I think the likelihood that they make a policy decision that pushes us into a recession is now higher because inflation has been so sticky.
Shana Sissel, founder and president of Banríon Capital Management, many thanks for your insight. Turning to the oil markets now.